Hello and welcome to Finextra. I'm Emily Horler and I'm here with Thomas Kennedy of Thomson Reuters, and we're talking about real-time and MiFID II compliance. Thomas, thanks for joining me.
Thank you.
How do you see the implementation of MiFID II impacting real-time data analytics?
MiFID II is going to have real implications for the financial markets. In terms of what it's going to offer, one is that transparency that's never existed before. In MiFID I, we had some transparency in post-trade reporting for equities. Now that's expanded into non-equity asset classes. So what we're going to see is we're going to see a lot more content on the post-trade side, so executable market information. And on the pre-trade side, we're also going to see some pre-trade data coming from the OTC or the SIs, systematic internalizers, which are going to be publishing through APAs. So in terms of the analytics, this is absolutely imperative to have this information for things like price discovery, which is very important for front office. So you'll see more real-time analytics emerge and more innovation happen within that space. But it's also very important to fulfill key aspects of the regulation like best execution and investor protection. So this data being available, now we're able to get better benchmarks and what the fair price of an asset is. So moving from mark-to-model based analytics to mark-to-market. And yeah, we're going to see real innovation across the asset classes.
How can MiFID II mitigate risk and strengthen transparency of real-time trading?
So one of the key aspects of MiFID II is transparency and the transparency of the financial transactions that are happening in Europe across any asset class and across any venue type. That content is very, very important to fulfill other regulatory requirements that are on the horizon. Such as BAL 4, FRTB, Fundamental Review of the Trading Book. This content is used to go in and provide better accuracy towards risk models, so banks can have less punitive charges and capital adequacy, so capital reserves on their balance sheets. So it's helping to achieve, post-2008, better capital controls and capital reserves. So it's mitigating systemic risk across the financial marketplace. So the transparency within the real-time trading space is going to be strengthened by a movement and a shift of trading on OTC, OTC-based trading, to on-venue. So we've seen post-MiFID II, there'll be 40 plus new venues register. So the market microstructure is changing. So we're going to see more movement of OTC to on-venue. So that liquidity and those pre- and post-trade feeds will allow greater transparency within the financial markets.
What does MiFID II mean for financial institutions, and what will be the expectancy on real-time data?
So for financial institutions, those that want to actually be the leaders and be a step ahead and differentiate themselves, want to be able to offer real-time services to their clients. This is where the real differentiators emerge. When we begin to see financial institutions derive products, whether that's post-trade, TCA, applications like pre-trade TCA, so looking at kind of market impact, all of these services that clients and financial institutions offer impact the price performance or the execution performance that their clients can get, hence saving them money and achieving the overall goal of MiFID II, which is investor protection. So that's really, really kind of exciting times, I think, for the investor, and the buy side, sell side really have to invest in technology to differentiate and content, and the real-time data being the fuel to drive most of these analytics.
Thomas, thank you very much.
Thank you.
And thank you for watching.